Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Friday, August 1st. Mixed, mostly lower trade now as we get closer to the pause. Corn is unchanged. Soybean prices have pulled back a little bit now, 2 to 3 lower, 2 to 4 lower in the wheat. Bean oil, that is down 30 to 40 points, while meal is mostly steady. President Trump did unveil the remainder of his reciprocal tariffs that will start taking place today. These tariffs range from 10 to 40%. Notables would include a 35% tariff on non-USMCA goods from Canada. That's up from 25%. Also 40% tariffs will be applied to imports from Switzerland. Still no word from the president on whether he will look to extend the current tariff truce with China. That does expire on the 12th. Global equity markets, they have backed up on fears of a global economic slowdown as a result of the tariffs. Futures right now are pointing to about a 1% lower open across the major U.S. stock indices. July unemployment report at 7:30 Central Standard Time this morning expected to show non-farm payrolls expanded by just over 100,000 last month, with the nation's unemployment rate ticking up to 4.2%. U.S. dollar is higher, and energy prices are a touch lower. Weather remains crop friendly as much of the Midwest experiences normal to below normal temperatures through the middle part of next week, while also seeing a reprieve from some of the heavy rains that we've seen here in the past week. U.S. corn and soybean areas in drought continue to ease down to 7 and 5% respectively. Spring wheat acres also fell last week, down 5% to 38%. Deliveries in the soybean complex jumped to 408 contracts against the August beans, down to only 3 contracts against the oil, and 629 contracts on meal, and that is down from over 1,000 the first day. Soybean crush from June is expected to be released after the close today. Expected to come in just below 197 million bushels. While down from 204 in May, it still would be a record high for the month. Oil stocks are expected to dip a bit to 1.863 billion pounds, the average trade guess. Slightly mixed trade now in the corn. D's corn overnight does find itself at about the midpoint of the range for the week. Support rests at the contract low at 407.5. Upside potential remains limited with higher production expected here and in Brazil. However, strong basis levels in Brazil have kept U.S. export demand strong, providing a floor of support above that $4 level for now. The Buenos Aires Grain Exchange reports Argentina, their harvest has advanced 4% to 88% complete, while they kept their production estimate unchanged at 49 million metric tons. Fresh 7.5-month low in Sep beans overnight. Fresh 3.5-month low for November beans. Nov beans find support at the spring low at 9.71 Yesterday's EIA data showed combined biodiesel and renewable diesel production rose 15% in May to 408 million gallons and was up now 3.6% year over year. Bean oil usage rose 23.6% in the month to 1.025 billion pounds. That's the highest since December of last year, as the market was growing increasingly confident the Trump administration would support biofuels produced from domestic feedstock. As a feedstock, bean oil usage grew to 35%, and that was the highest since November of last year. Quiet trade in the wheat, fresh lows, contract lows in September in Minneapolis for the 8th consecutive session. Buenos Aires Grain Exchange report Argentine plantings have reached 98%, while crop conditions improved 10% to 61%, good to excellent, well above the 31% at this point a year ago. Thanks for listening, everyone. Have a great Friday and a great weekend.